Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, and with me, Shrishti Sharma as well. But it's Friday and seems like the market is also celebrating the Friday because Nifty is up almost 0.8% in trade. Near the day's highest point, almost there, 22,173 levels is what it's managing to hold on to. Sensex 2 trading with similar gains of almost 0.8% uptick in terms of gains that we've seen for the Sensex as well. Let's look at the broader markets because what are they doing in trade is going to be important. At one point of time, they were in tandem with the benchmark indices. As of now, slightly below in terms of the performance with the benchmark indices. Nifty mid-cap is up only 0.4%, while Nifty small-cap 2 is up 0.4%. So yes, versus the benchmark indices, broader market still a bit subdued. But Nifty Metal, let's pull that up because that's the top sectorial gainer today, up 2.2% today in trade. Tata Steel among the top gainers coming in. We have JSW Steel as well, which is buzzing away. SAIL. All these are surely the names that have been buzzing away in trade. Other than that, let's put the spotlight on Page Industries. That's seeing very strong gains. BPCL, HFCL, all these names are also too in focus as well. Agrotech Foods, that's in focus and seeing a bit of a subduedness today, down almost 9% as well. So yes, on the back of that, we're keeping an eye out on Agrotech Food. We also have Max Healthcare, which is under pressure today. GPT Healthcare also under pressure, as well as Yatharth Hospital. So Yatharth Hospital has been in under pressure. Yesterday also we had that hospital news flow standardization in terms of rates. So yes, Yatharth Hospital too on focus, and all the hospital stocks continue to be in focus on the back of that as well. So yes, keeping an eye out on that in terms of the movers in terms of sector wise. Like I mentioned, we're seeing Nifty Metal seeing good gains, while in terms of the media and pharma pack, which continues to be a bit under pressure today. So keeping an eye out on the markets today. Very stock specific moves we're seeing. Broader markets are a bit subdued in trade versus the benchmark indices. But today is Friday, and on Fridays we get y'all BNS and Pathshala, which will tell y'all exciting stuff about the technicals. Learn more about technicals, what this means as well. And as always, to learn these basic about technicals, we have Kunal Botra joining in with us. So Kunal, thank you so much for doing this always with us. And today, RSI Divergence. What does this mean? What does this indicate when you look at these levels?
Thank you so much for that, Vinny. Again, I think the topic for today is a bit different than what we've been discussing earlier. RSI divergence, very, very important, a key concept in the field of technical analysis. RSI being one of the more prominent indicators, and I'm sure most of you guys already know what RSI generally means. It's the full form of that is relative strength index, and it's a very key indicator which we typically tend to map for each chart when we analyze whether it's on the shorter term time frame or the medium or the longer term charts for stock prices. So what we've discussed is one of the parts of how to try and visualize when the stock goes into a bottom formation. So we look at a very simple example of what RSI divergence is all about. These are two types of trends, for example, which maps out on the prices. One is where the prices go into a downtrend. So as you can see that the price, for example, on a relative basis is making a pattern of lower highs and lower lows. The indicator, that's the RSI, also maps very similar kind of a price in a trend trajectory for itself. But there comes a point when the RSI starts to form a higher bottom as compared to a price which continues to form a lower bottom for itself. So the price is forming a lower bottom and the RSI forming a higher bottom for itself. This is the first sign that a bullish RSI divergence is at play, and possibly the stock is nearing a major bottom for itself. So the prices are not giving an indicator as such, but the RSI is giving a first-hand indication that potentially the stock is likely to form a bottom over here and it could see a revival of sorts. I've taken two classical examples over here, both of them large cap names, which have already shown such similar signs of a RSI divergence and how the RSI divergence has played out and what has been the resultant effect into the stock price. The first over here is Titan. This is previous year when the stock was going through a very sharp downtrend. Look at this very sharp downtrend from 2,700 to a point when the stock was almost at 1,800 level. So a correction of almost 30% for the stock, which panned out. The intensity of the correction was more of on the higher side when the stock fell from 22,000 levels to 8,000. But over here in this zone, as you can see, that the RSI is actually forming a higher low for itself. This is a classical sign. So prices continue to form a lower bottom, the RSI forming a higher bottom, a first sign that a divergence is at play and the stock is likely to form a major bottom for itself. And then we wait out for triggers on the upside. And look at what happens. The stock reversed the entire downtrend, which was going on almost a 30% downtrend, to come back quite strongly and make a fresh swing high for itself in the subsequent next 2 months, just based on this potential RSI divergence. We'll see one more example. That's on the formidable PSU banking stock, SBI. The stock forming a very similar kind of a price divergence, price RSI divergence. Again, going through a sharp correction from sub 600, above 600 levels to sub 500 mark. And in this zone where the stock formed a double, lower low, the RSI formed a higher low, first sign of a divergence. And when that was completed, the stock started to get into a strong recovery and it moved from 500 to 600 mark. So a very classical concept of RSI divergence, very important when you are looking to anticipate stocks forming a bottom for themselves after a major phase of correction.
Absolutely. Thank you so much, Kunal, for the BNS and Pathshala. RSI divergence is what we learnt about today. Thank you so much for that, Kunal. But let's also bring on board Kush Bora also, who's joining in with us to solve all your stock-related queries. So today our experts are going to be Kunal Bothra as well as Kush Bora. Kush, very good morning. Thank you so much, as always, for joining in with us on ET Now. And Kush, my first query, actually, let's just get started with the query segment. So, obviously, the first query we have today is from Satya. Satya, very good morning to you as well. This one is on TTK Prestige as well as RCF. Now, they have a TTK Prestige at a price of 790 and RCF at a price of 170. With a 1 to 2 year perspective, how are both these stocks looking?
Hi, Vinny. First of all, very good morning to you. And just a quick word on RSI divergences. This is one tool that even I deploy quite actively. Although in the current market, a negative RSI divergence is something that's growing up quite a lot. And who better to teach this than our very own Kunal sir. So quite a session, very engaging, and I also found it very interesting. As far as the views go on TTK Prestige, the stock's been in a consolidation with a negative bias. It's very close to its medium-term support zone of 740. So perhaps a little under, which is 730 to 735 kind of a zone, is where I would place a stop loss. If that gets triggered, I would rather exit from this one, rather than being in a hope that, this could perhaps very well rebound. So an exit if 730 is taken out. RCF slightly different. We've seen, a sharp round of profit booking after, a very good bump up. Here we are seeing some sort of green shoot. So I think RCF is one stock that can be held on. From a near-term perspective, I think 160, and once that is taken out, about 172 kind of zones can be tested, and a stop loss comes in at about 140. So RCF as a whole, TTK Prestige is an exit if 730 is taken out.
That's the word coming in on RCF as well as TTK Prestige. Kunal, this next query we have is on NMDC Steel from Krishnan from Goa. They want to invest in NMDC Steel. Is it looking attractive at the current price? Could one enter this stock?
Well, yeah, I think so far so good. For the stock, the history, of course, is a lot more limited for this price. But currently at 61 levels, the stock has done reasonably okay. So I think from 30-35 levels to a point when the stock was at 70. From 70, it's come back to at 60. So when you look at this, the prices have rallied up and then it's completed a phase of correction. Now, the good part about the chart so far is that it's bouncing off from its 50-day moving average. Twice has the stock bounced from its 50 DMA. That generally is an indication that sooner or later the stock would probably try and find a bottom for itself closer to levels of 55 to 60 range. So it could be a good price where you may look to start accumulating at current levels and maybe keep some powder dry. In case if it happens to just retest the previous lows of 55, that could be a very good zone to average out further.
Okay, that's the word on NMDC Steel. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere because we'll be taking more of the stock-related queries after the break. The number will be flashing on your screen shortly. You can send us all your stock-related queries there as well. So don't go anywhere and start sending us your queries. Welcome back. You're watching Buy Now, Sell Now on ET Now. With me is Amit Sarkar as well. And obviously our two experts, Kunal Bothra as well as Kush Bora, are there with us to solve all your stock-related queries. Let's move on to the next query. And this query, Kush, we have is from Pradeep from Kolkata. They want to know in terms of MSTC, they bought it at 445 rupees, as well as Maninfra at a price of 94 rupees. What's the view for both these stocks? Should they continue to hold this for a time period of almost a year or 18 months if they look to hold?
Well, 12 to 18 months, fairly reasonable time frame. MSTC although has come in, a bit of a profit booking mode, but I think it's taking support. And if you look at the weekly charts, you'll see a green shoot here as well. I think MSTC is a hold from an 18 to 18 month perspective for sure. On the upside, 1050 and 1200 perhaps are the levels that can be looked at, and 875 comes in as a good stop loss. Man Infra, well, here too, we've seen some sort of a consolidation, but the recovery is missing. So I wouldn't venture any more averaging or any fresh trade, but can continue to hold on with a strict stop loss at about 200 kind of levels. If the stock does break that, then an exit. If it holds and rebounds from there, then there's a good chance that it can attempt, a recovery up until 235 and 250 kind of levels. So for the given levels, both of them are hold, but have a very strict stop loss in Man Infra.
Well, the next query is from Krishna from Bangalore, and he's holding around 20 shares of PI Industries bought at a price of 3,400. Kunal, he's asking whether should he book profits or continue to hold this counter.
Continue to hold. The stock has just recently given a breakout about 200 DMA after almost 2 months or 2.5 odd months of trading below this average, as well as going to a corrective phase. So I think maybe the good times could probably start back again to the stock price trends. The last 1 week or so, the stock has been consolidating into a band of 100, 150 points. It's been a bit more volatile in a zone of consolidation, but I would probably believe that could probably be a reason. Maybe the stock is getting into is likely to get into a breakout pretty soon. So I would suggest a hold on PI Industries. A breakout about 3,750 mark should take the stock back towards 3,900, 3,950 levels.
Let's move on to the next query, which is from Rima from Pune. Kush, this is on two stocks, Credit Access Grameen and Home First Finance. They want to know, is it a good time to enter these stocks now?
Sure. Well, not Credit Access Grameen for sure. The stocks, barely hanging on to the 200-day moving average by the skin of its teeth. And if that is broken, then, it could perhaps see lower levels, perhaps as low as 1400 also. So Credit Access Grameen, very delicately placed. So for me, it's just, an avoid for now. As far as Home First goes, well, this is a stock that can be considered as a buy on decline. The only catch is that, it's seen a sharp cut and hasn't really seen a revival except for maybe today. So I'd probably give it a day more. If it is able to sustain above its 200-day moving average and perhaps give a closing today and on Monday as well, then this can be considered as a buy. So Home First is a buy on dip, and Credit Access Grameen is a very clear avoid.
Girish Iyer from Trivandrum, and it's on Power Finance stocks. Firstly, PFC is holding around 10,000 shares bought at a price of 440. REC he's holding 10,000 shares bought at a price of 480. Kunal, he's currently under huge losses. Do you expect the share prices to recover to these levels, or should he just book its book losses and substitute it with some other bank, say ICICI Bank is asking?
See, short-term wise, the stock can correct further, because I think these stocks have not yet, looks like these stocks have not yet completed their phase of mean reversion. They have retraced back towards the 50-day moving average, but I think closer to 100-day moving average is where I would believe that the correction could probably culminate for these names. So I think I would probably expect these stocks to get into a short-term for the correction of 5-7% at least from the previous swing lows. But on the other hand, I would believe that the long-term structure is very positive for these names. So I think what you have to ideally do in this scenario is that maybe hold on to the stocks, bear up the next 5-7% correction if it happens into the stock price. If you're a long-term investor, if you are okay holding on to the stock for the next 1 to 2 years and more.
Okay, Kush, this next query is from Ayush, and they want to know for Orient Cement as well as Gabriel, they're making profits on both these. Around 70% profit is what they're highlighting. Now, the stocks have again started seeing a bit of a correction. So, is it time to actually start booking out profits in both these stocks?
Well, I'm assuming that they would have been holding to these stocks from at least a medium-term perspective. Now, the dip that we are seeing right now is more of a profit booking kind of a dip, that's come along with the markets. In fact, Orient Cement has gone into an oversold territory, also very close to that, and attempting a rebound. So I think Orient Cement is a hold. Although, a prudent way would be to hold it with a stop loss of 215. So Orient Cement is attempting a rebound, could perhaps, give slightly better rates than this. to hold with a stop loss. As far as Gabriel goes, well, this has been in a downturn for some time. Not a bad idea to take the money home and exit out of Gabriel.
Is from Kameshwari from Hyderabad. She has around 100 shares of Nelco bought at a price of 848 per share. Kush, should she book? Okay. Are you seeing more upside in this counter going forward? That's what her query is.
Well, the data certainly doesn't support that view. The 200-day moving average is broken, and an attempt of regaining that also has failed. So from my perspective, this would be an exit.
Let's move on to the next query, and this one is from Vishnu. Actually, this one is from, they've not mentioned the name. They have the query is on Vishnu Prakash Rogalia. They're holding it at a price of 203. Kunal, should they look to add more of this for a time period of 12 months?
It's a stock which has gone through a very sharp correction in the last 1 week, 1 or 2 weeks. I think from, if I'm not wrong, from 225 to around 180, 185, the stock had seen a single day correction, and post that it's just gone through a drag. So I would probably sense that the correction would still be not yet complete for the stock. I would expect the stock to come back towards at least 150, 155 before this corrective wave ends. So if you're looking to buy, add further, I would believe wait out for that last phase of correction. Maybe closer to 155 is where you can start and bring to the stock again.
The next query is from Parvinder Singh from Noida, and he's holding Navin Fluorine shares, 22 shares bought at a price of 3,800. Sumitomo Chemical, 50 shares bought at a price of 434. He can continue to hold for the next 6 months. Kush, what would be your targets for these two counters?
So, as we've received a lot of queries on this chemical space, and the view sort of still remains that not a lot of them have seen that kind of a great bump up, that was expected. So, my suggestion here would be to hold these with a tight stop loss, because any further dent could weaken the structure even more. So, on Navin Fluorine, I would suggest a stop loss of 29.50. If it were to rebound, then a good level to start considering taking some money out would be 3150 and then perhaps 3300. Sumitomo Chemical, fairly similar view, very close to the support zone of 365, 370 kind of levels. Here too, I would suggest a stop loss at 360, a fixed stop loss at 360. A rebound here could take the stock to about 395 and 410 levels, but again, those should be utilized as an opportunity to perhaps exit.
Let's move on, and this query is from Siva Reddy. And Kunal, this one is on Geo Financials. They want to invest around 1 lakh rupees. Can they start investing for Geo Financials now, and maybe systematically invest an amount every month for Geo Financials in the next 6 to 12 months?
Yeah, I think that could be a good strategy. So if you're looking to buy on dips, then I think starting at current levels could be a good strategy for Geo Finance. Now, of course, the chart history is a lot more limited to really go for a forecasting on a longer term basis. But whatever the stock has shown on the last 3-4 months indicates that there could be a sign of a very strong trend in the making on the long term charts. The 200-220 base has been a major support for the stock. And I think that aspect also at 300 levels approximately, the stock would look fairly attractive. So I would suggest a buy on dips, and that's a good strategy.
Well, the next query is from Rima from Mumbai, and it's on two counters. Firstly, ESAF Bank at current levels. She's asking whether should she buy this counter, and secondly, she has 56 shares of Gabriel India bought at a price of 150 rupees per share. Should she continue to hold or sell this counter? Kush, what would be your view here?
I'm sorry, which was the first stock?
ESF Bank. ESAF.
Sorry, I don't think I have the.
It's recently listed, I guess. Yeah, ESAF.
Okay. Got it. Yeah, you're right. Okay, found this one. Well, again, very limited data, but going by whatever data is available, this stock has not really done any wonders for itself or the investors. It's attempting a rebound, but could fail. There's a possibility that we could see slightly lower levels of about 55 also on ESAF Bank. And Gabriel India, as we just discussed, perhaps a good idea to exit. But given that she's been holding it for 150 kind of levels, perhaps from a long-term perspective, she could continue to hold on, but with a stop loss of about 330 odd. But from a near-term perspective, it does look like it's going to see some sort of a sideways consolidation with a negative bias.
Okay, that's the view there. But let's move on, and on that note, we're going to sip into a short break. But ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. Join ET Now Swadesh, Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds. Welcome back, and you're watching Buy Now Sell Now on ET Now. As of now, the Nifty is trading at the day's highest point, 22,200. Above those levels, up almost 1% that we're seeing in the Nifty. As well as, let's pull up what the broader markets are doing as well. And if they have picked up pace versus the benchmark indices, that's something to watch out for. Still, in terms of underperformance versus the benchmark indices, but broader markets too at the day's highest point. But let's keep it going then with all your stock related queries. And now on the fundamentals, we're joined by Vijay Chopra, who will be solving all your stock related queries. And yes, Kunal is here with us to solve all your technical and short term queries as well. Vijay, very good morning. Thank you so much for joining in with us. And the first query is on the hospital sector and hospital, two names that they've picked out, and this one is from Babu from Hyderabad. Obviously, yesterday we did have that Supreme Court direction that came in terms of the CGH rates, the fixed rates that could be there as well. So they have Apollo Hospitals as well as Narayana Health. They're holding these for the last 2 years. They want to know, is it still a good time to actually continue to hold this, or maybe book out profits of this, Vijay?
Well, I think that as far as Narayana Hospitals is concerned, I see a deep value in this hospital, and Dr. Devi Shetty has been a beacon of light for the entire cardiology industry. So I think that NH particularly, I would recommend that one should hold. While if you see Apollo Hospitals, so it had gone up quite a bit, so there's a decent correction happening. So if somebody wants to enter afresh, 5,800 would be a great area. But people who are holding since a long time and they've seen lower levels, no problem at all. They can keep on holding. This is definitely a blip because hospitals do some excesses in billing, and they charge a lot, and the customers bear the brunt. But again, I think that the courts are right when they say that there has to be some sanity in charging the customers. So this is, I think, that a normalization curve, and for sure, our hospitals are filled with customers and patients. So there's no dearth of business. So don't worry there. The profitability would, I think, that would come down a bit, but still all the good hospitals would be profitable. Because this is not such a big thing as the reaction has been. So I think that this reaction is already either priced in or would be priced in a few days, a week's time. So Apollo Hospitals, anywhere around 50 and 5,800 is a good buy. People who are holding long term, they can keep on holding. And NH definitely you can buy at these levels.
Next query is from Vidya from Bangalore, and it's on Tata Motors. She's asking whether it's the right time to buy this counter, or should she wait for some correction over the next 3 months, or should she do an SIP when it comes to Tata Motors? Vijay, what would be your advice here for Vidya?
I suppose even on your channel, I spoke a couple of years ago when this company was trading at around 230, 250, that it's going to be the India's Tesla. And now, many people are echoing the same thing. And, I've heard on various channels and various people talking about or talking in the similar vein that, Tata Motors is going to be India's Tesla. For sure, if somebody wants to get a fresh, wait for a correction. There would be a correction for sure. Anywhere between 850 and 900 is a good level. But I see Tata Motors as a Maruti in the making. So, from trucks to cars to JLR to an international venture. So there are lots and lots of things which Tata Motors has to offer. So, somebody wants to come afresh or buy afresh, I think that wait for a correction. There might be 100 odd rupees correction. It would be a good entry point. Otherwise, long-term people who are there invested, stay invested. I think that it's a Maruti in the making.
Okay. Kunal, this next query is from Sunny from Mumbai, and they want to know if they can start accumulating HDFC Bank and ITC. What's your view on this? And what is the time period also, that if they start buying, how much time should they hold this for?
So of course, the holding period has to be long term because these stocks are going through their individual phases of correction. But I think it's a good strategy to try and start accumulating these names because these stocks have come back to their major support points. Sooner or later, these stocks would also tend to participate into the upside once you see the news flow surrounding these two stocks being a lot more positive than what it has been. So I think it's a very good time to try and accumulate both HDFC Bank as well as ITC at current levels. My sense is that you have to have a time frame of at least 3 years plus for these stocks to try and for the larger trend to play out for both of these names.
Well, the next query is from Vidya, and she's a short-term trader from Chennai, and it's on L&T. Now, she has bought L&T at an average price of 3,370. She has been getting a good profit at current prices. Is it a right time to book profit or hold? Kunal, what would be your view here?
I would suggest to hold on. I think in this recent leg of correction and the recovery, it seems like the stock should be able to break past about the previous highs of 3,700 plus. So my sense is that there is a potential of another 150 rupees on the upside in the offering for L&T. So I would suggest to wait out and ride the entire trend. If you're looking to book profits from a short-term play, then 3,700 plus could be a good zone to book out.
Vijay, this next query is from Venkatesh from Indonesia, and they want to know on SOM Distilleries. They have 300 shares at a price of 275. Can they look to add some more for the long term for 3 to 4 years time period, or sit with the stocks they already have? Vijay, I think you're on mute.
Extremely sorry. Yeah. So I think that there are various other opportunities as well. So if you are invested in SOM Distilleries, why not diversify a bit? So keep on holding. I don't think there's a problem here. So I think that even if you want to be in this sector, so Associated Alcohol is a great company in the small cap mid cap space. I think that if you want the larger companies to, if you want to look at the larger companies, USL, United Spirits, and UBL, both are good companies to have with the longer term. But again, I think that the good strategy would be to diversify. And there are great options. Kunal mentioned about ITC, it is at great levels. HDFC Bank, it is at great levels. Hindustan Lever, it is at great levels. So Divi's Labs, it is at great levels. So why not get into good companies and F&O companies, large cap names, and diversify your portfolio?
Is from Mrs. Santi from Hyderabad, and she's holding around 100 shares of RHI Magnesita, bought at a price of 747 rupees per share. Should she average or book loss? Kunal, what would you view here?
I think it's a good time to maybe just hold on to the stock, not to exit, because the stock, even after this sharp correction from 820 to 570, it's the indicators are now entering into the oversold territory. Maybe the stock may get into a bit of a bounce from here on, and if the bounce shapes up, then I believe that the stock may come back towards at least a 600 to 640 zone. That could be a better zone to try and exit profits. But yeah, exiting would be a good strategy, not at current levels, wait out for a bounce.
Vijay, we have this next query, which is from Muni Rajulu from Andhra Pradesh, and they want to know, is it a good time to enter something like an Industar, LIT Housing, or Precol for a period of a long term is what they're talking about?
Well, I think better than LIC Housing, I was looking at the charts. PNB Housing is also one company which is giving a lot of promise, and it has corrected quite a bit. So you can flip it, LIC House, you can buy PNB Housing instead of LIC Housing, which has moved up quite a bit. And I see a lot of potential in PNB Housing as well. Which were the other two names you were talking about? Industar Capital, if I'm not wrong.
Well, the next query is from Siva from Chennai, and she has entered Canara Bank at a level of 580. She has around 400 shares. Can she expect a short-term? She wants to get a short-term target for the next 1 or 2 months. Kunal?
Well, I would suggest just hold on to the stock for Canara Bank, and I think short-term wise, I would look out for a breakout above 600 levels. But I doubt it may come pretty soon because of the way the stock has already run up. It could be time that the stock may consolidate. So I think if you have a time frame of 3 months and 6 months, only then hold on for a target of 600 plus.
Vijay, the next stock, we were talking about was Precol. They wanted to know on Precol as well. So what's your view on Precol? And I'll ask you on the next query on DCB Bank also. What's the view on DCB Bank for a period of 2 to 3 years?
Well, Precall, I think that it's a company which is growing steadily. The performance has been the stock performance and also the performance financially has been quite consistent. So I think that it can. It's a slow mover though, but definitely you can buy at these levels.
The next query is coming in from Vidya from Chennai, and she has around 50 shares of VRL Logistics bought at an average price of 605. Is it a right time to average more or book losses? Kunal, what would you suggest here for VRL Logistics?
Definitely not to average, but you may just wait out for a bounce and then look for a better exit point. I think 600 to 620 over here could be a good bounce zone where you may look to exit the stock.
Okay. Vijay, let's move on to the next query. This one is on HCC. The viewer Karishma from Delhi wants to know HCC, SUSON as well as HFCL. Would you suggest any of these for the long term?
Well, I think HCC, SUSON, HFCL, all are long-term games. And I think that, there is a turnaround happening in HCC and SUSON for sure. The revenues look better. The debt position looks much better. SUSON is now into strong hands. The Sun Pharma promoters have a chunk of SUSON. So I think that, if somebody wants to buy, wait for a correction, buy these stocks for long term in a correction. So I would again recommend that wait for some time. HCC, if you want to buy, buy somewhere around 32, 34. SUSON, if you want to buy, I think that the market gives you an opportunity anywhere between say 38 and 40 would be a great level to buy for a longer term. And similarly, HFCL, the stock has moved up quite a bit in the last few months, but wait for a correction. 90 odd would be a great level to get into if you are buying for a long term. All three companies are turnaround stories, and I think that every one of these can give good returns over a period of time.
The next query is from Srinath from Chennai, and he has around 200 shares of SBI bought at a price of 700. Should he book profits or continue to hold? What would be a short-term target for this, Kunal? And he has one more query. He wants to buy a railway sector stock for short-term views. Any recommendation on that front?
So SBI, I would suggest to hold on. I think I would place a target closer to 800, 820 approximately for SBI over the very near term. So you may watch out for those levels for the stock whenever it comes into that territory. Good zone to book out profits. From the railway pack, I would still believe that IRCTC is a much more formidable name, even though the stock has not performed in a manner in which many of the other high beta stocks like IRFC, RVNL, etc. have rallied up. But I believe that the chart prospects and the solidity of the chart is much better as compared to the other high beta names. So I would suggest IRCTC at current levels.
Suggest IRCTC at current levels. That's a word coming in from Kunal. Let's move on and talk about JSW Holdings. For the short term, Kunal Chandra wants to know, is it a buy or an avoid?
Well, I would suggest it's a buy at current levels, but the only catch with this JSW, the stock is the illiquidity on the daily charts on the NSE. I think the stock is highly illiquid, so you have to be very cognizant of the fact that you can't be accumulating higher volumes because entering the stock becomes easier, but exiting becomes a lot more tricky when the stocks are illiquid. So that's the only catch with the name.
And the next query is from Mahalakshmi from Hyderabad, and she's holding around 600 shares of Ashok Leyland bought at a price of 176 since more than 6 months, and she's saying that as there is no growth in this share prices, should she book losses and shift to Maruti Suzuki for long term? Vijay, what would be your view here?
Well, I do think one should shift at these levels. The stock has corrected. I completely agree, but it's down but not out. So I would say keep on holding Ashok Leyland. And I think in a couple of quarters it should be able to come back, and the stock can head towards 190 again. So don't book losses and in a jiffy. Just wait. I think that it would definitely come back.
Well, thank you, Vijay, for that. With that, let's slip into a short break and we'll address more investor queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and as of now, Nifty inching up slowly and steadily, up almost 1.4%, 22,287, so nearing 22,300 levels. Let's move on to the next query and keeping it going with all those investor queries. Bisaka from Kolkata, Vijay, wants to know on ACE, that's at which they purchased at a price of 417. While what should they be doing with this? Should they actually book out profits or continue to hold this? They've already been holding it for a time period of 2 years.
I think it's high time that they should book at least half. Because the stock has run up quite a bit. They have made almost 350% on their investments. So I would say that better to keep on booking rather than regretting that somebody didn't book. So I think booking is a better option.
Well, the next query is from Nagesh from Hyderabad, and he's holding around 4,000 shares of Bank of India at an average price of 115. He wants to know what's the near-term target price on Bank of India, Kunal.
145 was a previous swing high approximately for Bank of India, so that could be a near-term target for the stock.
Vijay, Virender is holding ICICI Prudential Life at a price of 334 rupees since 2016. Should they continue to hold this or maybe book out some profits now?
Well, I think one should hold. Traditionally, January, February, March are good, months for life insurers. And due to taxation issues, people do a lot of life insurance policies. So I would say that, wait till the next quarter, the stock might come up. And if at all you get a price of about 560 to maybe 600, that would be a great price to book out.
The next query is from Ramarao from Hyderabad. He's holding around 460 shares of United Breweries, bought at a price of 1,700 rupees. Vijay, what should he do? Should he continue to hold this counter, sell or buy more?
I think buy more, as I said earlier, when your team was talking distilleries. So UPL is a great company, much bigger, better than SOM Distilleries. It's in one way a large cap. So I think that with elections around the corner, the summer's approaching, so the sales would definitely increase. And I reckon that one should start buying at these levels is also a great strategy. People holding can maybe average or buy more. For a target of about 1,900.
Okay. Let's get started with the rapid fire then. And Kunal, this first query is coming for you. Yes, as the Nifty inches higher. Deepak Fertilizers is the first query on. Short-term view for this one, should they continue to hold? Subrata wants to know.
Yeah, continue to hold but not to average at current levels.
Vijay, next query is for you from Rima, HDFC Life Insurance. She's holding 150 shares, bought at a price of 620. Should she add more or exit the count?
I think one can average and wait for to 7.
Okay, let's move on to the next query, and this is from Shri Ganesh, and they want to know on Z Entertainment. They have bought 200 shares at 190 rupees. Kunal, for the next 3 months, what should they do? Sell, hold, buy?
Sell on rallies.
The next query is from Arvind Reddy from Hyderabad. He's holding 200 shares of Anantraj, bought at a price of 120. Kunal, should he sell Anantraj and shift his investments to Reliance or Adani Enterprises?
It has been one of my recommended stocks over the long term. I would suggest to hold on to the stock if you're a long-term investor.
Vijay, we have Bharatwaj from Coimbatore who wants to know on Mishtan Foods. Is it a good time to enter this stock for the long term?
Well, I think wait for some time. 18 would be a great level to enter, 17 to 18.
There is from RK Ahuja. He wants to know whether should he hold these three counters, Kunal, Divi's Lab, Finolex or IDFC?
IDFC, yes. Divi's Lab and Finolex I would suggest to exit.
Kunal Venkatrao wants to know, can they purchase SJVN and Tata Power at current levels? Good time to enter?
Yeah, I think it's a very good time to enter both of these names.
Next query is from Magesh from Dubai. He's holding NRB bearings, bought at a price of 343. Vijay, should he continue to hold this counter?
Well, yes, I think keep on holding at these levels. So it should do well.
Sarita K wants to know on Birlasoft. They're holding it at 460 rupees and Zensar Tech at 545 rupees. What should they do with this for 3 to 6 months time period now?
3 to 6 months, these stocks can just consolidate, but if you have a long-term time horizon, only then hold.
Next query is from Sushil Bareli, and he's holding 400 shares of Indiabulls Real Estate, bought at a price of 114. What would be the near-term targets, Kunal?
I think a breakout about 125, 126 should take the stock at least to 140 plus levels.
Vijay, lastly, just on Sequence Scientific, the viewer is holding it at a price of 98. Hold or sell?
Well, I think that sell on rallies would be the call. I'm not very happy with the financials.
Okay, that was the last query for today on the Rapid Fire as well as this edition of Buy Now Sell Now on ET Now. Thank you so much Kunal as well as Vijay for joining in with us, and it's a goodbye from Somit, myself as well as the team who put this show together. Don't go anywhere, markets are known, we'll take the action forward.